Hello, everybody. Welcome back to Spot Freight's More Than a Broker podcast. Excited to have everybody back with us this month, joined by two of my favorite repeat guests. I have Theo Mascari. Theo is a senior national account director with us here at Spot, very active in the food and beverage and grocery segment, among others. Brian Scott, our director of carrier sales, always with his pulse on what's happening with the carrier side of the market. So welcome back, guys. Today I would call Tariff Watch 2025 is the name of our show. I know all of our listeners and viewers out there are excited to hear what's going to happen with the tariffs. That's, I think, what we'd all like to know. So if you guys want to take it away from there.
Oh, wow. We get to predict what's going to happen next in the White House. That's a tall order.
I certainly can't predict that. I can tell you there was a lot of pull ahead that we saw beginning of, right ahead of Liberation Day. A lot of movement cross-border, especially from Canada with my team. I think really all across Spot. So volumes kind of picked up, but then it's since settled. I haven't been getting the calls as a rush order.
The urgent, type movement.
It's just not there.
Yeah, obviously kidding a little bit. Don't expect you guys to have the full picture on tariffs, but do want to hear from you, and I think the viewers out there as well. What do you see right now as the current situation, right? A lot has happened in the past 90 days, a lot of uncertainty, a lot of volatility. But as we sit here, what do you think the landscape really looks like? I guess, Theo, let's hear first from the shipper side, and we'll get to you in a minute, Ryan.
Sure. I think things still feel uncertain. We have our normal seasonality that's taking place. Produce is, getting to be in full swing on the domestic side. We've had this transition from imports from Mexico. I think those are down like 32%. Now we're into Salinas, Fresno area. That capacity there is starting to tighten. So you're going to see some spot market trends go up in those regions. California, southern Texas is where we'll see most of that happen. But I think there's still just a lot of uncertainty.
Right. Ryan, what are things like in the carrier world these days?
Yeah, I think a lot of the things Theo's talking about with produce certainly affecting the carrier market. The tariff news, albeit it's very back and forth and tough to parse through sometimes. I think anything that I've heard and seen from the carrier side of things, the tariff news is not welcome from the carrier perspective. Right. I mean, I think we've seen some of the pull forward impact that Theo referred to. I think with this 90-day pause, we're just kind of in the beginning phases of. We'll probably see a little more of that activity. But I think it's important to remember the trucking fundamentals still exist. So the things that carriers need to be focused on right now, they've always had to focus on. It's just a matter of making sure discipline is at the forefront right now. I think some fleets that can be a little more nimble right now and capitalize on certain markets that are seeing some heating up and as far as produce goes is really going to be key for those fleets right now.
Yeah, I mean, I think from a carrier perspective, they can't control what's happening in the macro environment. They've got to be sure that the service levels are there, that they're highly responsive and providing, good quality transportation, and try to stay in those niches that make sense. And to your point, I think discipline's a key word there, probably. Theo, back to you, I guess, with what you see in terms of the market, are you seeing any shift in shippers' mentalities? Are they thinking at all longer term, or is everything still kind of short term? How do we navigate this period of time?
From the shippers that I deal with, everyone is still kind of business as usual. I think we're still thinking in terms of your 6 to 12 month RFP cycles. In particular, there's not this consistent, hey, let's try and recapture savings because there is that uncertainty. Right. So I think they'd like to, shippers want to keep routing guides in place and then see where we are, 6 months down the road.
Yeah, it's an interesting comment, right? Like, what shipper right now wants to go out and test the market and try to lock in a rate? Because you might end up in a really good position if you do that, but there's also a chance that it could go a completely different way. So probably a hold strategy might be what makes sense.
Absolutely.
I think we're seeing similarly from the carrier side. Certainly, if there's solid contract rates to renew, they're going to do that. But there's a little bit of a cautious hesitancy to lock in longer-term contract rates that are at operating break-even for carriers. So I think that's something to keep an eye on. Just so much uncertainty right now.
Yeah, yeah. I think that brings up a good point that I wanted to reference is there was a lot of enthusiasm with carriers as we started the year, early January, new administration. That's all, largely kind of fizzled out in the market. Do you have a sense of whether, especially smaller carriers, are they back to struggling the way that they were as we wrapped up 2024? Or do you feel like they've determined there's a little bit of breathing room here? I guess how does that feel to you?
I think all the tariff news has sort of taken the wind out of their sails. You look at some of the cost pressures they've been experiencing over the last few years. A lot of that's been around insurance and some other administrative costs, driver wages. Now, on top of that, we're looking at potential for increased costs on parts, on new trucks, with aluminum and steel tariffs. So maintenance costs going up higher than they have in the past. So all of that compounding
Continued
on top
pressure,
of each other is
right?
now with the backdrop of potentially demand falling once again if broader tariffs do come into fruition. So I think, it's unfortunately not a. I think we are back to kind of how we felt last year, unfortunately, on the carrier side.
Right. Obvious rate implications if we see capacity come out of the market in another meaningful wave, but absent that happening, what are your thoughts on where the rate environment is kind of right now relative to prior mid-April's typical cycle? What's your sense of kind of where we are right now?
I mean, I was feeling pretty optimistic that we'd see, single-digit increases. I think it's really going to be regionally where those rate increases might be. I think for spot reefer rates, we're looking at, we're only a percentage or two above where we were in 2019 levels, which isn't saying much. We've gone 6 years
The
now.
whole cycle and
Right.
ended up in the same spot.
Correct. So obviously, as Ryan mentioned, things are a lot more costly currently. Insurance, truck parts, I think as rates remain where we are, carriers might start to forego routine maintenance and replacement, and that could cause now we're looking at breakdowns and parts become harder to get. So it's going to be an interesting environment.
Yeah. I mean, the other thing, too, that folks have noted is the pressure that a lot of the publicly traded carriers have had on their stock prices. So year to date, 25, 30% decreases for some of the larger carriers. That, I think, will have implications on their capital purchases, the replenishments of the fleets, and that has a downstream effect, too, onto smaller fleets. Ryan, any thoughts on those lines?
Yeah, from the larger, more the publicly traded. I know last month we were waiting to see what the earnings may have looked like for Q1. Most of them haven't reported yet publicly, but there is a pretty large shift towards maybe not a shift as much as just a concentration and emphasis on true dedicated, out and back, shifting away from irregular route one way with the larger fleets. So I think that's something where, yes, earnings are under pressure, stock prices are under pressure right now. But I think shifting their model and emphasizing to investors that we're reacting in a way that's going to drive value for our customers and insulate us a little bit from some of this uncertainty is important.
And drive efficiencies and the benefits of scale of having a larger fleet. But again, back to that discipline word, I guess.
Yeah, and the scale, I think, again, shifting more towards focusing on utilization of the existing assets rather than fleet growth. I haven't really seen too many carriers out here talking about growing their fleets right now.
Right.
So I think it's really about utilization and making the most of their assets they have.
Yeah, I think that's fair. If you had to take your crystal ball and say, we remain in this uncertain environment for another 30, 60 days, which is probably likely, where do you see capacity going, where do you see rates going? What does the crystal ball tell you as we head into the summer?
I think the summer is an interesting time that we're talking about this because looking ahead, generally we have a couple of events that drive up demand and tighten capacity a bit. You've got, your DOT week, Memorial Day. Usually that's a kind of a indicator of what
couple of weeks stretch for the market.
For sure. And then that kind of gives us an indicator on what the summer might look like. But it's just there's so much outside of the normal cyclical trends we see that it could prolong this lull and make the summer a little bit less dramatic in terms of demand, I think.
Yeah, to Ryan's point, if you look at southern Georgia, I know Vidalia onions, like they had a record growing and output season last year. Not going to be quite as robust this year as what they're calling for, but that just started in South Georgia, so volumes might not be quite high there. There's obviously the hurricane impact of Florida citrus, so some volume output might not be as high as anticipated there. But you also have Mother's Day coming up, so you could see a pinch, mid-May down in Florida. Obviously, a lot of floral comes from Southern California as well.
Right.
Compounded with produce, might see a little bit of tightening in those regions. But this 90-day pause is kind of falling in that same time frame as peak summer produce. You have your other seasonal items, grilling season, hot dogs, burgers.
Favorite time of the year.
Yeah. Oh, the best. So yeah, we'll end up seeing what happens here, but not sure how it'll look.
I take that all as a sound, cloudy crystal ball. Don't know. We'll have to see how things unfold in the next 30 days or so. But I think a good point, Ryan, that we do have in the freight world a couple of key events that are coming up here in May that probably will be a good barometer for how that summer looks and on into the fall. Well, I think we'll leave it there for this month. Thank you, gentlemen. Appreciate it. Thanks, everybody, for joining and watching this month. Please check out Spot on all of our social channels, spotinc.com. Thank you.